You're listening to Switched On Australia, the podcast that tracks the opportunities and challenges of electrifying everything, everywhere. Switched On is brought to you by the publishers of Renew Economy, Australia's best informed, most read website focusing on the green energy transition, and is supported by Boundless Earth. Boundless Earth uses philanthropy, investment and direct advocacy to help Australia become a global force in a decarbonised world. Hello and welcome to Switched On, the podcast that explores the people, the ideas and the tech powering Australia's clean energy future. I'm Anne Delaney, speaking to you from Arakwal country in northern New South Wales. Australia is gearing up for a surge in home batteries, thanks to the new federal subsidy aimed at helping households cut bills and support the grid. It's a big step, but how those batteries are used could make or break their value. Because this isn't just about having a way to store our excess solar power. These batteries will need to be virtual power plant ready, VPP ready, which basically means able to operate in coordination with the grid. At the moment, most household energy systems like rooftop solar, batteries, EV chargers and hot water operate independently of what the grid needs. And that actually means we're not unlocking their full potential to lower emissions, support the grid or reduce energy costs. Now, new modelling shows that if we get the incentives and the signals right, if we reward consumers properly, for instance, we could unlock $14 billion in value, most of it from homes. But if the pricing and incentives aren't right, households could actually be penalised for connecting more smart energy tech. One key part of the solution is what's called orchestration, which allows smart devices to automatically respond to energy price signals in real time. But to make that work, we need fair pricing, open access and a level playing field for the new players, not just the big legacy retailers. One Australian company that is already doing energy retailing differently is Amber. Instead of profiting when you use more energy, Amber gives you direct access to the wholesale electricity market so you can shift your use when it's cheapest and greenest. Well, that's the aim. And before you think that sounds like hard work and you don't have the time, the inclination or knowledge to deal with the wholesale energy market with its changing prices, take a listen to my guest today. It's a rerun of a conversation I had last year with Dan Adams, the co-founder and co-CEO of Amber Electric.
Amber is an electricity retailer, but fundamentally we see ourselves as a technology company. And our goal is to help customers unlock more value out of their home batteries and out of their electric vehicles, and to help customers use more renewable power, and in doing so, save money.
How do you do that?
So we have a pretty different model to a traditional electricity retailer. We give customers direct access to the real-time wholesale energy market. And then we just charge a fixed $19 a month subscription fee. And so what that means is that we don't make any money from selling energy to consumers. Our only margin is that $19 a month that we charge. And so what that means is that we are on the customer's side. We just want our customers to get the lowest possible bills and we want them to use the most possible renewables. And so the way that we do that is that by giving customers access to the wholesale energy market directly, that means that customers can directly benefit from using that cheap renewable power when it's available in the middle of the day. In the middle of the day, there is 3.7 million solar systems feeding to the grid, lots of large-scale renewables, and as a result, wholesale prices are often very, very cheap in the middle of the day, sometimes even negative. And so that means that customers can really benefit from charging their home batteries, charging their electric vehicles, running their washing machines, dishwashers, dryers, etc. In the middle of the day when there's those cheap renewables available. And it also means that customers can get paid the same price as a big coal and gas generator where they're exporting into the grid. And so it means the individual household with an individual home battery can compete directly with a big coal-fired power station and earn the same price during that evening peak.
But do you have to have the solar panels and the batteries to really get the most out of Amber?
No, you don't. So we have about 37,000 customers today, and we've got about about 9,000 customers with a home battery or an EV. So we have a lot of customers that don't have those devices. Because even if you don't have those devices, you get to buy power at that true wholesale price. And so that means that if you have got large loads in your house that you can run in the middle of the day, when there's lots of renewables in the grid and those wholesale prices are really cheap, you can save a bunch of money by using power at those times. And also you can support the energy transition because you can use more renewable power when it's available. And so one of the markets that we're really able to help is often renters that can't install solar panels on their own rooftop. But what they can do with Amber is they can basically get access to that cheap solar power that's available in the middle of the day from everybody else's rooftops. And so it means that you actually get a lot of the benefits of solar by having cheap renewable power in the middle of the day without actually having to install those systems on your own roof.
But surely there is a risk that you could get caught out because you do have to use some power in the evening when it's obviously going to be a lot more expensive. Do you really need to be pretty energy and tech literate to get the most out of Amber?
Yeah, so customers that are either have a large device that we can automate, like a home battery or an EV, those customers, do the absolute best. They've got a really large device. We can automate that for them. They don't have to think about it, and we'll help them get the most value out of those devices. If you don't have those devices, it does require a little bit more engagement to try and use power at those cheaper times and try to avoid using power, occasionally when there are big price spikes in the grid. One thing, though, is that we do have a bit of an insurance policy in place for our customers. So we cap the maximum price that customers will pay over a quarter, and sort of slightly above the default market offer. And so what that means is that customers have got all the benefits of buying power at that cheaper wholesale price. But if something crazy happens in the energy market and those wholesale prices become really expensive, customers have some protection against those scenarios, which 99% of the time that doesn't happen, but it's good for the peace of mind to know that that's there in place.
I was interested to hear what you just said, that you don't get rewarded for customers using a lot of energy. I mean, that's quite a radical thing when you think about it, because our retail industry is basically made money out of people using more and more energy.
Yeah, completely. I think we've tried to do things very differently, and we really set out at the beginning when we were building Amber is to be on the customer's side. Our goal is to accelerate the energy transition and to help consumers. And so we didn't want to be making money by selling energy because that creates this conflict of interest. Then suddenly we've got to choose between doing what's right for the customer and what's right for the business. Whereas when you set up the incentives this way, everyone's incentives are aligned. We just we transparently charge a subscription fee. Everyone knows how much we make. And then we don't make any margin from selling energy. So, we have no incentive to sell you more energy than you need. We want to help you be more energy efficient and use power at those cheaper times. Because ultimately, then you'll have a good experience with us. You'll tell your friends and family about us, and that'll help our business grow. And so our incentives are very aligned with the customers. And then also, I think what's nice about it is that the customers' incentives are aligned with their renewable transition. When there's lots of renewables in the grid, those wholesale prices are really cheap. And when power's coming from expensive coal and gas, it's usually a bunch more expensive. And so at all levels, we think incentive alignment is really important. And so, our goal is to align the customer's interest with what is required for the renewable transition, which is why we give people access to dynamic prices, and to align our interest with the customers, which is why we just charge a subscription fee rather than making margin on selling energy.
So are you making money, Dan? Because if you're not, obviously you won't be able to continue.
We're growing pretty quickly. We've nearly doubled in size in the last 9 months or so. And there's obviously a certain scale that we start to break even and then start to make profit. We're not too far away from that point. I think we should get there within the next 12 months or so. So at the moment, we are a fast-growing startup, but the path to having a profitable, sustainable business is not too far away now, which is exciting to see that on the horizon.
One thing I do wonder, though, is that, I'm hearing how some people are actually making money through amber by selling back at the right time. And now, obviously, you've got to be reasonably energy tech literate to be able to do that. Who are the people who are making money out of using amber?
Yeah, so we actually have quite a lot of customers making money, which really changes the dynamic further. They don't really see us as in electricity retail that's sending them a bill every month. They see us as giving them access to the market and giving them the technology to help make money out of their home battery system. And over time, will also be the same with vehicle to grid and making money out of your EV, which you come back to in a moment. But basically, the people that are making money are people with a home battery. In most cases, we've got a few cases of customers vehicle to grid making money, and the way that they do that is step one, we give customers access to the energy market as we described before, and so that means that customers can get paid the same price as a big coal and gas generator during the evening peak. Sometimes those prices spike up to $15, $16, $17 a kilowatt hour. So hundreds of times higher than what you would get with a typical feed-in tariff of 4 or 5 cents a kilowatt hour. That doesn't happen very often, but when it does happen, it's a really big opportunity for customers with a battery to feed their power into the grid during those times and earn a lot of money during those short periods of time. So there was a period about maybe 3 weeks ago now in New South Wales where the grid was somewhat constrained. The coal and gas generators were charging a fortune, and we had thousands of our customers' batteries. We were automating them to discharge into the grid during that peak. I think our customers made about $600,000 in over 2 days. Those customers up there, which was pretty cool. So I think it was an average of about $200 and something per customer in those 2 days out of their home battery. And those sorts of events don't happen all the time, but they are happening increasingly frequently as we go through this energy transition. And from the customer's perspective, it's pretty simple, really. Like if you've got a home battery and you sign up to Amber, we will integrate into the home battery so that we can control, with your permission. You will set your constraints and preferences around that. You say, I never want my battery to go below a certain, below 20% full, for example. And then we will just optimize that for you. So we use machine learning to learn the solar production at your house. We'll learn the angle and tilt of the roof of your house. We'll learn that you've got a tree that shades your house until 11 in the morning and you produce more solar in the afternoon because your panels are west facing. We'll learn typical usage behavior, and we've built a price forecast. We built that with CSIRO to be able to accurately predict what wholesale prices are going to do. And now actually beating the market operator on that, which is pretty cool.
Agree.
And then we use those forecasts to work out how do we maximize the value for you out of your battery. And so if you don't want to engage with that at all, you just set that up. Takes 5 minutes, and then we will just optimize that for you and help you make money out of your battery. But if you want to, you can take manual control because, as I said before, we just set out to help customers unlock the value out of their assets and to help customers stay in control, because really that's what customers want. And so if customers want to change the settings on that algorithm, if they want to actually manually sit there all day and charge and discharge their battery, if they think they can do better than our algorithm, then they're welcome to do that, because we're not making money out of that. We are just giving customers the tools to unlock the value out of their own batteries.
I was intrigued though, that's a lot of information that you get about customers. How willing are they to hand over that information? Because, some of the research that's now coming through is that a lot of people are very distrustful of retailers, energy retailers, which is why customers get stuck on certain plans, which actually possibly aren't the best energy plans that they can get. I mean, how do you think that you're overcoming those issues about trust?
So trust is really important. In fact, I think it, in many ways, is a big part of the key to the consumer-led energy transition. If we just step back for a moment, there are going to be 5 million home batteries and EVs installed between now and 2030 in Australia. The energy market operator says that we need about 18 gigawatts of battery capacity by 2030. Those home batteries and EVs equate to about 30 gigawatts of battery capacity. So there'll actually be more capacity in our home batteries and our EVs the entire battery storage requirements for the energy transition. So it is a massive opportunity to get us to 100% renewable future. But the key to that is how much of that home battery and EV capacity can we unlock for the energy transition? And that really comes down to, are customers willing to engage? Are customers willing to trust someone to automate their battery to help unlock that value for them and to help support the energy transition? And what we've seen to date is that in most cases that hasn't been happening. In Australia, about 86%. There have been VPPs operating in the Australian market for 5 or 6 years now.
But they're not heavily subscribed, are they?
That's right. Yeah, about 86% of households with a home battery are opting out of those VPP programs. And I think a big part of that when you go and talk to customers is this point of trust. It's like, I don't like the idea that my energy retailer is controlling my battery, is making money out of my battery. I'm not sure how much money they're making, how much margin they're taking on that. They might discharge to the grid and then there's a power outage and I won't have any power. This doesn't seem like a very fair deal to me. And I don't like this idea that I don't have transparency in what's going on. I don't have a sense of control. And so really that's what we set out to do at Ambit. We said, look, there are going to be these millions of batteries and EVs. If we can unlock a large share of those batteries and EVs, we can shift billions of dollars of value from fossil fuel generators into the hands of individual households that own these batteries and these EVs. And we can meet a large share of the battery storage requirements for the energy transition. But to do all of that, we need customers to trust us and to want to hand over the control of those devices. And so the way that we do that is very different to the traditional VPP way. So the first thing that we do is, in terms of building trust, is we are completely transparent. We, as I said before, we just charge a fixed subscription fee. We then pass through those wholesale prices. You can look up publicly what all those prices are. We're not making any margin on any of that. We show customers, in the Amber app, what those prices are at all points in time, what we're forecasting for their usage and for their solar production. So one really important value to us is transparency, because we think that's really, really important. And then a second one is making sure the customer is actually in control. We think this is the customer's battery. This is the customer's electric vehicle. They should be fully in control of that asset. They own that asset. Unlike the sort of VPP where you have to hand over control of that asset to your big energy company, our model is that we are just giving you the tools to unlock the value out of your own battery. And so you can manually take control and charge and discharge that battery. If you want us to optimize it for you, we will do that, but only within your constraints and preferences. And you are fully in control at all times. And then I think the last bit is that the customer gets all the value of that optimization. We charge a subscription fee, but the customer gets the full value of their asset in the market. And we think that's only fair. Like the idea that you own this battery or this EV, and that your utility is making a whole bunch of money out of an asset that you own, just doesn't seem very fair to us. And so with that sort of mindset of being fully transparent with our customers, putting them in control and allowing them to keep the full value of the asset, we think that is the key to, one, building trust, and in doing so, unlocking the huge potential here for home batteries and EVs to accelerate the energy transition.
Yes, because the whole purpose of orchestrating, well, this is what the energy industry calls it, orchestrating our consumer energy assets, is, as you've just described, coordinating and managing the various energy producing devices. That's all about supporting the grid. But you've managed to support the grid on occasions too, haven't you, as well as do the right thing by your customers. Tell me what happened when some extreme weather, I believe, knocked out some of the major power generators in Victoria.
Yeah, so I think it was about February this year. There was a transmission line went down. The grid was under massive strain. The wholesale energy price went to the price cap, which translates to about $19 a kilowatt hour for customers. And as a result, we call it Smart Shift, our optimization algorithm, started automating customers' batteries. Customers that had given us permission to do that, automating their batteries to discharge into the grid. And so in doing so, those customers were earning a whole bunch of money. They were earning, $19 a kilowatt hour for their exports, but also they're helping the grid. Like at that moment in time, the grid was under massive strain. There was a supply shortage, and those customers' batteries were discharging to the grid, and helping meet that evening peak, and helping to directly displace gas generators that otherwise would have been required at that point in time. And so in doing so, not only were those customers making money out of their battery, and not only were they supporting the energy transition by displacing fossil fuels, they're actually bringing down costs for all energy consumers. Now, at the moment, we're at a relatively small scale, and so that impact is not huge. But you can imagine that we get to the scale of, we're automating hundreds of thousands of batteries in electric vehicles. That can have a really big impact on bringing down the overall costs for energy, or for all energy consumers, because basically what you are doing is you are using a generation source that is already sitting there, basically being underutilized. People have already bought these home batteries. They've already bought these electric vehicles. And so all we're doing is a software cost to automate those devices to help the energy transition. That will always be cheaper than a fossil fuel generator, but it'll actually be cheaper than a large scale battery, which is obviously, or pumped hydro, which is one of the alternatives here, because people have already bought these devices. Yeah. There's no additional capital cost. You're just unlocking that value out of that asset that is already there. And so I think,
and also it's cheaper because there isn't those transmission lines. I mean, the cheapest energy is the energy you use where you produce it. Surely.
Exactly. So it's really a win-win for the consumer, for the energy transition, and for the costs of all other consumers as well.
The way you're painting it, Dan, is that it seems like a no-brainer why consumers just wouldn't opt to use a model like Amber. Do you reckon that industry disruptors like Amber are going to put pressure on incumbent retailers to, at least offer better deals, or alternatively change their business models? I mean, I know they're going to do that reluctantly, but maybe they will. Maybe it will.
I think the penny is starting to drop, and many of the big utilities around the world are starting to think this way. And maybe I'll just give you an example. So in Norway has the highest uptake of electric vehicles anywhere in the world. I think it's something like 90% of new cars over there are now electric vehicles. And there's a company there called Tibber, who've got a very similar model to Amber. They give customers direct access to real-time wholesale dynamic energy prices. They charge a fixed subscription like us, and then they automate customers' electric vehicles, automatically charge at those cheap renewable times. And they have grown. Basically the most similar company to us in the world. They're doing exactly the same model. They have grown from sort of 0 to 500,000 customers over 6 or 7 years. And they are now bigger than many of the incumbents utilities in Norway. Obviously, Norway is not a huge market. And so as a result, the incumbents are all now switching to the dynamic price model. So all the incumbents are now racing to try and release a dynamic price, wholesale energy price model for consumers. They're trying to build the technology to help customers automate their EVs to the charge at those cheapest times. And so that they have really moved the market over there. And our expectation is similar dynamics are going to play out all around the world. I think Tibber have been leading in Norway because Norway is a leading market on EVs. I think we've been leading on this in Australia because Australia is a leading market on solar and home batteries. But I expect that other markets all around the world start to follow the same dynamics as batteries and EVs take off, that this model will get more and more traction around the world. And I think that's happening. You see that happening in quite a few markets. It's the sort of dynamic price Amber model is getting a little traction in the Netherlands at the moment. And there are a number of other markets around the world that are starting to do things like this. So I think that will be the future, and I think that will happen in Australia as well. And I expect a bunch of other competitors will come into the market doing the same thing as us, and I expect the big utilities will start to go down this path as well, because the world is changing. Like in the old world, the role of a utility was to build, own, operate a coal-fired power station, and convert that into the cheapest possible price for a consumer. And they were competing entirely on price in the market. But where the world is going is that people are buying home batteries and EVs. Those home batteries and EVs are really important assets in the energy transition. And the value is going to shift from the coal-fired power stations, the gas-fired power stations, to the individual customer that owns those home batteries and EVs. And so therefore the question that customers are going to start asking is not what is your cents per kilowatt hour price of energy of a utility. They're going to start asking, how much value can you unlock out of my battery and out of my
How much money can I make?
Exactly. How much money can I make out of these assets? Like it's a completely different way of thinking about this. And so as that happens, utilities around the world are going to start having to compete on their products and how good are their technology products rather than their price. And I think that what customers want is that customers want to be in control of their assets, and they want to maximize the value out of their assets. And if you want to give people those two things, you need to give people the right incentives. And the right incentives to give people access to those dynamic prices.
So how's Amber going to compete when you've got a number of other players doing exactly the same thing?
I mean, the first thing I'd say is I think that's great. Like our mission, the reason I started Amber is I wanted to accelerate the energy transition in Australia and around the world.
Because you don't have a classic background to run a power company, do you?
No. So I actually started out running campaigns on social and environmental issues nearly 20 years ago now. I organised the Make Poverty History concert and campaign with Pearl Jam and U2 way back in 2006, and 50,000 young people to ask the government to increase our aid budget, which they did when Kevin Rudd got into power. And then I ran campaigns around climate change leading up to the UN climate conference in Copenhagen back in 2009, and ran another big sort of concert and campaign around that, and did that for a few years. But obviously, that was much less successful in terms of getting the policy outcomes that we were looking for from the Australian government. It's taken a very, very long time. And so I basically came to the conclusion that what I wanted to do with my life was to accelerate the energy transition. And in order to do that, one path was to build campaigns and try and influence the government to change policy, which I did for 5 or 6 years. But I basically came to the conclusion that I felt like I could have a bigger impact in the world if I could build a business that was creating positive change in the world. Because if I could do that, I wouldn't have to keep going out and raising money for the next nonprofit campaign. I'd be able to build something that was fundamentally sustainable. And then if you can build a business that is positive change is inherent in that business, and it can get to profitability, then that is infinitely scalable, and the impact that you can have is infinitely scalable. And so, from my perspective, that's what gets me out of bed every day. That's what I'm excited about, and that's why we've worked, really hard for the last 6 or 7 years now to build Amber, is because we want to have that impact. And so, in my mind, if a bunch of people come into the market and copy us, that would be a great outcome. That is helping to achieve that mission. So from a mission perspective, that's my mindset. I do think that we have. It's been really hard to get to this point. Like we've had to build,
because you're doing something so different, aren't you? I mean, it's a real left of field idea in terms of what you're doing, and the legacy companies are going to hang on to the bitter end.
Yeah, I think that's right, and I think it will. I'll be delighted when they start to follow us, but I think it will take them a lot of time to catch up, because we've now spent 7 years, tens of millions of dollars, building this technology. We had to build what we're trying to do is take all of the complexity of the energy market and make that as simple and delightful for customers to help them get the value and help support the energy transition. And that's a really hard thing to do. Like, people have seen the writing on the wall for the last. After I ran campaigns, I actually went to the Boston Consulting Group and worked with. I was working as a consultant, working with a bunch of electricity retailers and networks, both in Australia and in the US, on these sorts of problems. And then after that, I was at Tesla, working on developing Tesla's VPP. And so sort of seen this from a bunch of different perspectives. Over the last 10 years, many people have seen this huge opportunity coming. They've seen the wave of batteries and EVs coming. They see the huge opportunity that they can play to accelerate the energy transition and to unlock, probably hundreds of billions of dollars of value internationally. And no one has really cracked it. And I think no one has really cracked it for two reasons. One is it's actually just a really hard problem, which I'll come back to in a second. And the second is I think people have been going about it the wrong way. They've been taking this sort of utility mindset of we own coal-fired power stations, we own gas-fired power stations, and now we're going to control these home batteries and EVs like they want a big power station, which is the BPP model. Whereas our view is customers own these batteries and EVs, and we need to build products for the end consumer to help the consumer to give the consumer what they actually want, which is value and control. And so that is a very different mindset. And so I think that's one piece. But then the second piece is actually just really hard. Like we've had to build the integrations with all the different batteries. So we integrate with Tesla batteries, we integrate with Alpha SS batteries, with SunGrow batteries, with Solar Edge batteries, etc. And we're adding more integrations to the Fronius integration. We're adding more all the time. We're now building integrations with EVs to automate EV charging as well. Then we have to build those the solar forecast, the usage forecast, the price forecast, which took us years with a bunch of PhDs in machine learning. Then we had to build the optimization algorithms to be able to optimize all that every 5 minutes and update all those forecasts. Then we had to build an electricity retail from scratch because we wanted, we felt like we need to build this for customers directly, which meant we need to become an electricity retailer. Turns out that's pretty hard. It takes a lot of time.
That is a lot of determination, Dan.
And then we had to build the product and the customer experience around that and iterate that over years with customers. And so there's a lot of pieces that had to be put together to be able to deliver that experience to customers
and to make it simple, because that is so crucial to this issue.
Exactly. And so we've basically spent 7 years taking that complexity and trying to deliver a simple, delightful experience for customers. And we're not there yet. We're getting better all the time, but I think it's really exciting to see the product and the team just releasing new features all the time, and the product is getting better and simpler for customers.
Because one of the main issues with people's difficulties in electrifying and understanding that the energy industry is that it's complex. It's so complex. Do you think that the legacy industry has an interest in keeping it complex?
So I think the legacy industry has an interest in people being disengaged because basically the business model of traditional utilities or traditional retailers has basically been charge people a pretty competitive fixed price on day one to get them in, and then hope that they don't really think about energy very much, hope that they don't really engage, don't give them any reason to engage, and then when they're not looking, just slowly put up the price and charge them more and more, this sort of loyalty tax idea. That is, and so it is in their interest that customers are not engaged. And so you often hear people say people aren't engaged in energy, people don't want to think about energy. Well, that is kind of by design. That's how the retailers make money. But our view is that, yes, we need to make this simple. Yes, people don't want to be engaging with the details of the energy market every day of their life. But people are willing to engage to some extent if it can save them hundreds or even thousands of dollars a year. And people do want to save money on their energy bills, and they do want to support the energy transition, and they do want to electrify their homes. And if we can help them with those things, then that's good for the customer, and that's good for the world, and that's good for the business as well.
Yeah. Now, we've mentioned EVs a few times, but in moving forward, we're going to need to harness the power that's within the batteries on wheels, as EVs are being referred to. We don't yet have full bi-directional charging in Australia. How is that going to move things forward even further and faster?
So there's two parts to EVs. So the first part is smart charging, which is put into the umbrella. I want my car charged by I want my car charged by 8 a.m. tomorrow morning, and us helping you to find the cheapest, most renewable time to charge your car. And that's what Timber has been doing over in Norway, very successfully. And so our team has been working on a similar product in Australia to help people just smart charge their EV. So this is just one-way charging, but rather than charging at the expensive times from coal and gas, charging your car from your rooftop solar or from your home or from the grid when those prices are cheap. So that is a product that we're working on right now. We plan to release that in the next few months. So we're excited to get that out, and we've got a bunch of sort of early beta testers using that product at the moment. And so that can already support the energy transition, build demand for renewables in the middle of the day, and save customers money. But the next phase after that, which is even more exciting, is vehicle to grid, as you described. And that is actually allowing customers to take power out of their electric vehicle and discharge that into the grid to help customers make money out of their EVs. And to give you a sense of the scale of that opportunity, when we're automating a customer's home battery, we're unlocking between sort of $600 and $1,000 a year of additional value out of their home battery. And so we're bringing the payback period on a home battery down from 10 years to 5, 6, 7 years, which is actually making home batteries genuinely economic, which is super exciting. But the value that you can unlock from an electric vehicle is like $2,000 to $3,000 a year out of your EV, because your EV battery is much bigger. It's about 5 times bigger than a home battery, and so you can unlock thousands of dollars a year of value out of these electric vehicles. Now there are still, as you described there are still some tech barriers to being able to deliver that. So there are there's probably a couple of barriers. So one is regulatory approval to allow you to discharge your EV into the grid. A bunch of the standards for batteries didn't imagine that the battery was going to drive away every day. And so there's data, the regulations are sort of struggling to keep up with that. But I know there's a team working on that at the moment, and I think that will be resolved over the next sort of 12 to 24 months. That will actually allow that. It's been approved in South Australia. Hasn't yet been approved in the other states, but we expect that will happen within the next couple of years. So that's exciting.
We have been waiting.
We've been waiting
several years on this one.
Very well, but I think it is. It's going to happen imminently. And then the second, and then probably there's actually 3 pieces. So one is the regulations. 2 is the actual vehicle to grid charges. So you need a different sort of charger that not just charges your battery, but actually it has an inverter in it as well, and takes the power out of your battery, and then can feed that to power your home and feed that into the grid. There is the only one available that has been available in Australia is a thing called the Wallbox Quasar. We have so we do actually have a small number of customers using vehicle to grid on Amber today. It is a very small number of customers. It's like 5 customers using it. But it is real. And so we have customers, but it's customers in South Australia with a Wallbox Quasar charger, and it's a Nissan Leaf or a Mitsubishi car that is able to...
because they're the only ones with the bi-directional charging at the moment.
That allow you to do that. But we do have customers. So during that price spike I mentioned, we actually do have one customer in New South Wales that has got an exemption to have vehicle to grid in New South Wales as well. And that customer made, I think, $300 out of their electric vehicle, out of the Nissan Leaf, in one day, about 3 weeks ago.
Happy customer.
Which is pretty cool. And I think that actually might be the first time anywhere in the world that anybody has made that much money out of an EV. Which is pretty cool to see that happening. I think that really is the future, and this is happening, and this is going to happen within the next 1, 2, 3 years. Like, it's imminently going to happen, and you can imagine the size of the opportunity. There's going to be 3 million EVs in Australia by 2030. Many of the new EV models coming to the market are vehicle to grid enabled. Tesla said they're going to enable it. I think it's from next year. Many of the new cars coming to the market are vehicle to grid enabled. There is new CCS vehicle to grid chargers that are expected to come into the market next year, and we're expecting the regulations to follow. And so as that all happens, this is going to be a absolute massive opportunity for consumers. But I think it's another case where on the Amber model, that makes so much sense. You've got access to the market. You plug in your car. You say, I want my car charged by a certain time. I never want the status charge to go below this level. Within those constraints, just go and make me money out of my car. And so people have an incentive. They want to plug their car in for as long as possible to help the energy transition and to make money out of their EV when they're not using their car. Very hard to do that in a sort of VPP model where the utility says, I will control your EV charging and discharging, and you must have your car plugged in between this time and that time. Like, our view is that just does not work. Customers need to be in control of their EV charging and discharging. And so, that's the product that we're building, and we're pretty excited about it.
I drive a Tesla, a Model Y, and I'm secretly hoping that I can be given bi-directional charging simply through a software upgrade, but maybe that's a little bit naive.
So I've been trying to get to the bottom of that as well, and I've heard different opinions on whether they'll be able to do that. It's actually the hardware's already there, and they'll be able to do that with a software upgrade, or it'll only be for the new cars. But I guess Tesla will let us know in the next couple of years.
Well, and they're not going to tell us beforehand.
Yeah.
I just want to look at another issue which has been quite controversial, and that is what's being dubbed as the Suntax. These are the two-way electricity tariffs that the networks are introducing. They say to better manage the huge amounts of rooftop solar coming into the grid. Basically, people with solar can be charged a penalty if they export their solar during the middle of the day, but will receive a generous, that's all relative. I was going to say generous feed-in tariff, but that's relative, if they export during the evening. What's your view of this Suntax? Because it's possible that other networks will also introduce it in other states as a way to manage the amount of solar going onto the grid.
I think it really gives us an insight into what's happening in the energy market and the fundamental problem that we need to solve to get to 100% renewables. Because the fundamental physical problem is that we need to match supply and demand at every moment of the day, at every second of the day. And what's happening right now is that we have 3.7 million solar systems, more generation capacity on our rooftop solar than all the coal-fired power stations in the country, which is pretty amazing. Feeding power into the grid in the middle of the day, when most people actually aren't at home, and the grid is increasingly going to reach this point that there is actually more solar being generated in the middle of the day than people are using, and so that is a fundamental problem that we need to solve. And then separately, we have during the evening peak, people's solar systems stop producing power. Everyone comes home from work and starts using a whole bunch of power. And so that there is more demand than supply or renewable supply at those points in time. And so if we want to get to 100% renewables, the fundamental problem that we need to solve is how do we match supply and demand? How do we fill those gaps when it's not windy and sunny? And so our view is that the way to do that is to give people the right incentives so that they want to use that solar power in the middle of the day, to shift their demand into the middle of the day to use up that excess solar power, to charge their batteries, charge their electric vehicles, run their washing machines, run their dishwashers in the middle of the day when there is all that cheap excess renewables that otherwise are going to get curtailed. Shift that demand away from those peak times when there's less renewables available, but also to export power out of their batteries and out of their EVs to meet that peak period. And so if you want to give people that incentive, one way of doing that is what we're already doing with AMBER, which is actually just giving people access to the wholesale market. The wholesale market is already cheap in the middle of the day, telling us to use power then, and expensive in the evenings, telling us to export then. And basically what the networks are facing is the same dynamic the energy market is facing, is that they are facing this problem that there is too much solar generation in the middle of the day, starting to create, reverse flow on the grid. And they are facing constraints in the evening peak as more people use power at those points in time. And so, I think the reality is that is actually what's happening. And if we can pretend that's not happening, but that is actually the fundamental problem that needs to be solved. And so if we need to solve that, we actually do need to disincentivize people from discharging and feeding solar into the grid in the middle of the day. And we need to incentivize people to discharge during the evening peak. And so I know that's probably not what solar customers, people that have solar and don't have a battery, want to hear. But I think that is
No.
actually the fundamental economics that, unfortunately we can't get away from. And so what we need to do is help people use more power in the middle of the day. So they're using that solar rather than feeding it into the grid, and help people and encourage people, support people to be able to buy home batteries so they can charge up during those times and then discharge in the evenings. And so the networks are doing what, Ausgrid's doing that. But my expectation is basically all networks are going to do that. And the value of solar feed-in tariffs are going to go to zero, if not negative, pretty soon.
Well, it's also the penalty that if you export your solar in the middle of the day, some consumer groups are concerned that that's going to discourage solar uptake, and as you've just been saying, that it's going to encourage battery uptake.
Yeah.
And that to me seems like a good solution.
Yeah.
If once batteries come down in price, do you think it will discourage new people taking up solar?
So, I think it potentially will, and obviously that is a disappointing outcome. But I think the fundamental problem, if we want to get to 100% renewables, the fundamental problem that we need to solve is matching supply and demand, which basically means getting more batteries into the grid. And so, more money starting up until this point, all the money's basically going to solar, a little bit into batteries. People starting to shift that towards investing in batteries, I think, is going to be, really what is fundamentally required to get to the future that we want. And our view is that the fastest and cheapest way to get us to a renewable future is to empower customers. I think you've already seen that households have led the energy transition in Australia. They've installed more rooftop solar than all the utility scale solar farms and wind farms, and we should support them to do the same thing with the next phase, which is getting those home batteries into people's homes rather than the large scale batteries. Obviously, there's an important role for the large scale batteries as well. But if we can support those households to do that, that's really what we need for the energy transition. And so, I guess my view on that is we probably can't get away from the fundamental economics that we need to encourage people to consume more energy in the middle of the day and export more in the evenings. But the government could be doing is supporting the uptake of batteries so that customers can take advantage of that. And so things like this $3.5 billion that in the last budget to give $300 to every customer. For example, if we took the 50% of households with the highest incomes, and that's the half of the $3.5 billion. And we invested that in a subsidy for home batteries, that would subsidise hundreds of thousands of home batteries to come into the market. And really, that's what I think we should be doing, because that's the fundamental problem that we need to solve, and it's the same problem that we're trying to solve at Amber.
Yes. Dan, I just have something I just want to clarify. My understanding is that some of your current feed-in tariffs are part of a trial you've been doing with Ausgrid in New South Wales, which actually finishes at the end of June.
That's right.
Can you just tell me a little bit about that? What that trial was and what happens after the end of June?
So that trial is very similar to the new programs coming, although the prices are quite different. But basically, we already have, I think now probably thousands of customers on that trial tariff in the Ausgrid region. And basically, what happened is that customers would have to pay if they were exporting solar into the grid in the middle of the day, but they would get a big payment from the network if they were discharging during the evening peak. And so, as a result, we have had a lot of customers in New South Wales with negative bills. I think about 50% of our customers in the Ausgrid region are actually got negative bills. So we pay them instead of them paying us, which is pretty remarkable. But that has been very generous. I think it's somewhere around the order of like 27 cents of additional that they've been getting during that evening peak.
And that's going to drop, isn't it? Just to a couple of cents.
That's right. So basically, this, what you were describing before about people being charged in the middle of the day and being paid direct. Well, it's basically transitioning to that. That was a very generous version of that two-way tariff. And what is going to happen from July is that it's going to go from 27 cents bonus during the evening peak. I think it's going down to 2.3 cents from memory or thereabouts.
That changes the whole setup, though, in terms of paybacks on batteries, etc., and distributed energy resources that people have invested in, doesn't it?
That was always a trial. Everyone knew that was going to end at the end of July. I think it was a great trial to demonstrate that customers would respond positively to that, and that would start to discharge in the evenings if they were being paid to do so. But actually, a lot of the value, we have a lot of customers, most of our customers aren't on that two-way tariff in the Ausgrid region. Obviously, we've got lots of customers all around the country, and those customers don't get access to that. And most of the value still comes from the energy market. You're exporting into the evening peak, and you are getting paid to displace fossil fuels, and you're getting paid the same price as big coal and gas generator. And so that value will always be there. In fact, it's probably going to increase as we go through the energy transition and more coal and gas comes out of the system. And I think these network tariffs will increasingly be available, but probably not at the extremely generous end of the spectrum that we've had for a short period of time in the Ausgrid region.
Mm-hmm. Just a final question, Dan. The future looks bright from where you're sitting.
It does. I'm very optimistic about the role that households can play in getting us to a renewable future. I think households have demonstrated, Australian households have led the world in the uptake of rooftop solar. We are increasingly leading the world on the uptake of home batteries. EVs, we didn't have the right policy setting for a long time, but we now have the fuel efficiency standards coming in, and EV sales are, starting to accelerate in this country. And I think that consumers are going to continue to want to support the energy transition. They're going to continue to buy the home batteries, to buy the EVs, to electrify their homes. And if we give them the right tools and technology to automate those devices, to accelerate the energy transition, and we're really excited to support households to do that, and to see that happen in the market over the next few years.
Well, as Will Anderson would say, you've sold me. Dan Adams, thanks so much for joining the Switched On podcast today.
Thank you.
And Dan Adams is the co-founder and co-CEO of Amber Electric. That's it for another week. Next time I'll be chatting with the Tesla driving Sparky about the ins and outs of a home battery. I'm Anne Delaney. I hope you can join me then.